Hi, my name is Mitchell Neary. I'm a partner of MJ Business Solutions, an accounting firm in Heidelberg, Victoria. What I'm going to do in the next minute or two is briefly explain self-managed super funds and how that could apply in your circumstances. Now, we've been inundated recently with requests from clients who want more control over their superannuation. And they're asking us, should I have a self-managed super fund? And how does it work in my circumstances? First thing I would like to say is this video is not advice to you. This is just education on how super funds work and some of the things that you might need to consider. But please come in and see me and I'll be able to give you a personally tailored statement of advice to explain how you could benefit from self-managed super funds. As you can see in our diagram here, what we've got is a summary of a self-managed super fund, which normally has a company acting as trustee, and generally there's up to 4 members within the self-managed super fund itself. Now, people go into a self-managed super fund if they want more control over their investment choice. So if you're not willing to put in the time to be an effective trustee, it's not worth doing. And there are a couple of other reasons why it might not be worth doing as well. But if you're willing to put in the time, we'll show you how and what needs to be done and give you a checklist so you can work with us. Now, consider using a holding trust to buy a property in a super fund. It's one very interesting option. Now, a lot of people with self-managed super funds buy shares or have cash. A self-managed super fund in its own right can't borrow, but if you do have a holding trust, it can borrow money from a bank and you can buy a property, which results in a larger gross asset value working within your self-managed super fund. Now, if you did this repeatedly and had 2 or 3 properties, by the time your age is 55 or even 60, then you can switch the fund to pension phase, which means when you sell off the properties, there is 0 capital gains tax and any ongoing income of the fund is taxed at 0%. At 60, anything you withdraw is tax-free. So that's why self-managed super funds are really worth considering, and that's why we'd like to talk to you about that. One of the other great benefits is the flexibility inside the actual super fund itself. You can include insurances in there such as life and TBD. Essentially, the premiums are paid from the super fund itself. Another great benefit is the fact of estate planning, which you can choose exactly where the assets in the super fund actually go without any issues over claimability from external sources. That's a really big thing because the money to beneficiaries is not contestable like it would be in a will. With shares, you can hold direct shares within your super fund. It works exactly the same as if you're holding a share account with an E-Trade or some other external company. You can have managed funds in there, and of course you can have property, bonds, term deposits and cash as well. Please come and talk to us. We're here to help you. Self-managed super funds are something that are well worth considering for your retirement future. Thank you.